I am Tony, the Geeky Agent from here in Hamilton, Ontario, Canada, actually in the little suburb of Binbrook. I'm going to turn my phone down so you don't have to listen to me twice. Just going to check down here. There's a bunch of people tuning in, which is awesome. Thank you so much. Kelly's kicking around. Hey, how you doing? Steven's there too. Brian, JP, and Amanda. Happy day after your birthday, Amanda. I hope you had a lovely day. I'm sure it was. Yeah, so we got a bunch of people kicking around there. That's awesome. So if you're kicking around in Hamilton, and if you are a real estate agent, you'll know that the Realtors Association just released their final number for 2017 this morning. So we're going to have a quick look at where the average price ended up, what the overall sales numbers were like, the unit sales and that sort of thing, and how that breaks down as far as freehold properties versus condominium properties in the city. So really quick chat this morning. We're not really going to dive in too deeply, but we're going to take a quick look there and see sort of historically how it's been. We have numbers going back as far as 1955. So I'll have a quick look and see what the average price has done over the years. So let's have a quick flip to the first slide, which is this one, the messiest looking slide that I have. But what we're having a look at here, if you're looking at the columns that are shown there, the red and the blue, those are the houses that were listed and the actual homes sold. So the blue columns represent the number of homes that were listed, and the red columns represent the number of homes that were actually sold. And this goes back, like I said, to 1955. So as you can see, in any given year, the blue bar is much larger than the red bar. A lot more homes get listed than actually get sold. And that does change over time depending on what the economic circumstances are every single year. So if you go as far back as 1955 or 1956 actually, you can see that 44% of the homes that got listed for sale actually sold within that year. And it fluctuates over time. So that little black bar is the percentage of homes that got sold that year. And you can see it's a crazy thing. It just goes up and down all over the place. If you have a look at that really big dip in the numbers is 1990. So in 1990, if you were around in 1990 and you're old enough to care, there was a recession in the early 90s that kind of put a damper on things throughout the 1990s. So back in 1990, only 21% or 21.4% of the homes listed for sale actually sold. But then that really rebounded fairly quickly. I mean, quickly being relative terms, it took about a decade for things to get really going again. And if you have a look at not 2017, but 2016, that was sort of the peak for us. So in 2016, just over 80% of all the homes that were listed actually sold within that same year. So really high demand, properties were selling through, and we actually took a dip last year. So as most people know, if you listen to the media, if you've been watching my videos here, if you've been talking to your local real estate people, you'll know that towards the end of the year, sales took a really big dip, mainly because of a lot of announcements that came out from the federal and provincial governments over the years, changes to the interest rates. So overall, at the beginning of the year, sales were happening extremely rapidly. It was hard to even keep a property on the market, but it slowed down so much towards the end of the year that overall only 65.6 or roughly 2/3 of the homes that were listed for sale actually sold. I was fortunate enough, I only had one property all of last year that didn't sell, and that's only the second one in 6 years, I think, that's happened to me with, mainly through market conditions. The market did change towards the end of the year, and they could no longer obtain the price that they were hoping to get for that home, so they took it off the market. Things happen. But yeah, so overall, the percentage of homes being sold went down. But as you can see, if you follow that little red chart, although it does fluctuate, it is on an upward trend pretty much all the way through. And you can see that year over year, the percentage of homes is increasing. Percentage of homes listed is increasing. So demand continues to rise. People are putting more and more emphasis on owning real estate, either as an investment or for themselves. If you have another look here, what we're going to have a look is the average price. So at Hamilton-Burlington, the average price going back to 1955, you can see this chart is generally speaking on an upward trend, and it has been ever since the beginning. Barring some little slight fluctuations, it's been pretty reliable all the way through. If you start back in 1955, the average price of a home in Hamilton-Burlington was $10,757, which is about 60% of what I've paid for my last car. So to put it in real terms, that's what happened there. Then at about 1983 3, you can see the little tiny marker there. The average price was $67,920, and you saw a huge upswing in prices all throughout the 1980s, such that by the time you get to 1988, you've got the average home price at $168,458. And that's even during the period with extremely high interest rates. So even with double-digit interest rates, you're seeing an extreme amount of growth in the average price of a home. Now, towards the end of the 80s, the economy shifted. Our lovely government decided to sign NAFTA, and a lot of our jobs got offshored throughout the late 80s and early 1990s. The economy didn't do so well. Again, I mentioned we had the recession in the early 1990s. So throughout the 90s, the real estate market in Hamilton-Burlington anyways didn't really lose a lot of ground, but it stayed pretty flat all the way through, and then starts another upswing once you get into the 2000s as the economy starts to improve. Then the little American flag there indicates actually the housing collapse in the United States back in 2008. So notwithstanding that housing collapse in the United States, which decimated the markets in the United States and did some severe damage to the stock markets globally, the prices here in Hamilton-Burlington didn't really take a big knock. So in 2007, the average price was just under $288,000, and by 2009, a year after the recession started, the prices were at $314,500 roughly, the average price here in Hamilton-Burlington, and it just continued to climb since then, such that in 2017, that's last year, if you include both Hamilton and Burlington, the average price of a residential property is $576,418. If you subtract Burlington out of those numbers, because generally speaking the prices in Burlington are higher, the actual average price in the city of Hamilton proper, we call it the downtown area and the immediate mountain area surrounding it, the average price in the city of Hamilton proper was around $495,000. So a fairly significant difference there. But that's the average price. So as you can see, it continues to climb. You don't really see, as much as you see fluctuations in the unit sales of houses, so the number of homes being sold seems to fluctuate pretty wildly at times. The actual average price has remained continued to show pretty steady growth since 1955. So real estate overall has been a pretty decent bet. You do have to factor in inflation, so that curve will not be as steep if you took inflation into account. But overall, there's an upward trend to the average price of housing in Hamilton-Burlington. It's not getting any cheaper, put it that way. So if we break that down a little bit further, we can have a look at the residential properties only. This combines both freehold and condominium properties. So this is an overall look at the city. So this is just Hamilton proper. And as I mentioned, if you go down to the third line and look at the average sale price in Hamilton, it is $496,560. So that's excluding Burlington from our numbers. And that's an increase of 16.3% over last year, which was around $427,000. If you take a look at the line above it, you will also notice, though, that the number of sales declined. So overall, our number of sales in Hamilton-Burlington went down about 6.9%, but the average days on market actually declined, so things were selling a little bit faster. And the end of the month listing inventory is actually quite a bit higher right now. So as we've seen a decline in sales, when you get to the end of the year, there's still a large number of properties on the market. As we saw the numbers from the previous chart, only 66% roughly of the houses that got listed were sold. So a lot of those properties are still sitting on the market and available for purchase. If we move on to the next slide, we'll have a look at just residential freehold properties. So this is not including condominiums. And if we have a look, the average price for residential freehold properties, so these can be pretty much any type of property. Most apartment type properties are not included, but it does include townhouses and row houses, semi-detached properties, etc. The average price there is actually significantly higher at just under $525,000, which is a 16.8% increase over 2016. Sales were still down about 9.1%, so about 9% overall. And the average days on market is slightly lower at 4.2%, but that's a difference of 24 days on market versus 23 days on market. So nothing really significant there. And still a fairly high amount of properties on the market at the end of each month on average, again, due to those lower sales numbers overall. And if we switch over and have a look at the condominium market, we can have a look and see that the average sale price for condominium units, and these are generally not houses, not detached houses. We do have a lot of apartment type condos, and we do have a lot of townhouse or row house type condos in Hamilton of varying types, single story, 2-story, etc. And the average sale price for those was $354,000 roughly, compared to $295,000 in 2016, which represented a 20% increase over prior year. So in both markets, both the freehold market, which went up about 16%, and the condominium market, which grew 20%, these are astounding numbers for any market. We're generally speaking, on an average year, if you get somewhere around 5 to 7% growth, you're doing extremely well. 4 to 5% is more common. But if you're into the double digits, like 16% and 20% growth, something good is happening. There's a lot of people moving into the city. Jobs are coming back to the city, which is attracting more people. And the overall average price is going up. Excuse me. I'm still a little bit sick. So that's what I like to do, is cough. And how did we do at RE/MAX Escarpment? Our 2017 year in review. At RE/MAX Escarpment, we are the premier brokerage in the city, basically. I'm sorry to say, if you're not working for us, then So last year we sold 8,850 unit sales out of a total unit sales, I believe, about 15,000 or so in the city. So we were involved in transactions. We represented either the buyer, the seller, or both in all these transactions. We listed 7,160 properties with a total revenue of about $4.8 billion in total sales from those properties that we are involved in. We have our own appointment center that books appointments for us, and through that appointment center, we booked over 102,000 appointments in 2017. So it was busy. Even though the sales were down, people were out looking for homes, and it was very, very busy. We sold one house approximately every hour, every 60 minutes. And we have been the number one brokerage in terms of market share and sales since 1994. And for the last 5 years, we've won the Consumer Choice Award here in Hamilton, and that's extended to Niagara for the past year. So for 1 year, we were also the Consumer's Choice Award winner in the Niagara region. So we're doing all right. Doing all right. I work with a really great group of people. As one of my managers, or managers, I guess, likes to say, we got a really good group of working realtors in our office. So pretty much everybody I speak to is always busy. They're out working, they're out seeing clients, they're booking appointments, they're helping buy and sell properties from people coming into the city or people relocating out of the city. So it's a really great place that I like to work. I'm just having a quick look to see if there's any other questions here. Steph Panay is here. Hey, Steph, one of our brokerage members who's also on the Hamilton Real Estate Board. Greg is here, Jeff, Brian, Adam, a whole bunch of people, and no questions. So I'm going to presume that means I explained everything extremely well, as always. And I do thank you for tuning in. In case you are wondering, this is RE/MAX Geek TV, at least my version of it. I am the Geeky Agent Tony from RE/MAX here in Hamilton, Ontario, Canada, and I do appreciate you coming by. If you are looking for me online, you can, of course, find me here on Facebook, but I'm also available on YouTube and Instagram and Twitter and Snapchat and Pinterest and Tumblr. But Facebook, YouTube, and Instagram is my main domain, and everywhere else I'm kind of there once in a while. But send me a message through either of those means, and I'll be sure to get back to you. If you want to contact me directly, you can reach me at 289-237-9896. Please send me a text or give me a phone call. Email me at tony@thegeekyagent.com. If you're looking for me on my website, you can find me at thegeekyagent.com, of course. And you can also look up HamiltonLifestyleSearch.com to help you find a home here in Hamilton based on all the regular criteria that we always use, like size of home, price, number of bedrooms, bathrooms. But you can also search by things like your commute time. So if you don't want to live any more than a 45-minute commute to work, you can put that in, and they'll only find properties for you within that radius. So that helps you out a little bit there. Or if you're looking for a specific school district, you can do that as well. And that's it for me. I really do appreciate you all tuning in. That's just a quick little one for today. Thank you. I hope you have a great rest of the day today, Friday, and a great weekend ahead. I'm out showing properties in Hamilton-Burlington and taking my son to robotics and getting ready to go to New York. I'll be at Inland Connect next week. I'll be at Hacker Connect on the Monday, and then just bumming around New York until Wednesday, and I'll be back and running here in Hamilton on Thursday. So have a look here on Facebook and Instagram. I'm sure I'll be posting lots of photos and videos of my little trip down to New York, my fourth trip to Manhattan. in the last 2 years, I believe. And yeah, I love going down there, and I'll be sure to share some of that with you. But again, I hope you have a great rest of the day. As always, I do appreciate you coming by. I am the Geeky Agent, and I will talk to you again soon. Bye for now.